Ladies and gentlemen, how's it going? We're going to be talking about if the CEO of AMC, Adam Aron, had to make one of the most difficult business decisions that had to pay basically one of the biggest costs, and that was the loyalty of its very, very loyal shareholders. Now, with that being said, AMC actually consolidated on the day, but with this severe decline in price, does this put AMC more back on a stable path in terms of its business operations and its financials to hopefully have a recovery from here? Now, there's a lot of questions up in the air and of course a lot of speculation. So if you're new to the channel, hit that like button, subscribe for daily videos, and of course, I'm not a financial advisor, so take everything I say with a grain of salt. Everybody should know that. I'm just doing research and sharing it with you guys. Now, pop it up on the screen here. AMC at 734. Interesting, kind of consolidates on the day. After we had the announcement, of course, remember, of the 40 million shares that were going to be sold that came public, you had AMC that came crumbling down. At least the crumble did not continue and actually had a little bit of consolidation, up about 2% of the day. Volume 26 million, and looking currently at options, still tons of puts, lots of contracts, especially expiring at the end of this week for strike prices below $7. But we're going to be talking about not just what's going to be happening this week, but what could be possibly in the future for AMC. And with these decisions, was the cost of the shareholders, was that worth the possible benefit of AMC's future from preventing bankruptcy? That's the biggest question, I think, is the answer there. I don't know if anybody has that true answer, but possibly saving the company, I think, is more important than going bankrupt, because then everybody gets 100% screwed. But one important thing to remember is AMC shareholders, they have been taking a beating. They have been facing a lot of grief, down over nearly 90% over the past year due to those legal battles and share dilution. We've seen AMC stock price crumble in valuation. Now, talking about that, of course, many of you know, and if you didn't, AMC went through that 1-for-10 reverse stock split, converting those APE units into common stock. And then you had that basically, which brought dilution, and then AMC has its public announcement that it wants to sell over 40 million shares right here of its common stock, and this was allowable thanks to the company's equity distribution agreement, which basically allows them to raise a lot of money. So the question is, despite the share collapse right here, what the headliner says, AMC could possibly be safe. And is that especially with the share price that the company, with the cash liquidity that it did raise, it secures $448 million in cash for the company. And was this basically the company, is it fundamentally stronger than it has been at any point in the last 3 years? And it's not surprising that some analysts that we've even talked about in the last previous video have really raised their price targets on AMC following the APE conversions. Now, with that, AMC still does have the potential to issue even more additional shares. Those will be likely at a lower price. Now, talking about why they had to raise this cash is because the amount of debt that they have. They have $9.5 billion in debt and lease obligations, and they're trying to enhance liquidity, have more cash on hand, refinance existing debts, and repay loans. And if they're not able to do this, then bankruptcy is what is next after that, after those maturity dates hit, and they say, hey, we don't have the money. So this could become one of the most significant basically business decisions in the company's history, and especially to address those financial liabilities of AMC. So Adam Aron, he did have to make these great decisions in terms of basically the cost of his shareholders to help save the company. I do believe in that. So, however, to bear the cost, and in the case, the loyal shareholders, will they stay strong? That's the biggest question. Or will they continue to sell? Will they continue to leave? And especially since those shareholders did help AMC save and play a pivotal role during the whole pandemic years of 2020, 2021, when everybody was talking through the short squeeze. But now the sense that they have a fundamentally strong basis with some cash on plan, and we do have what's going on next with AMC, and that is that Taylor Swift, the Eras Tour, that's going to be starting in October 13th. We're already seeing records break through the roof. We know those Taylor Swift fans do go crazy. So those fans coming together and everybody wanted to watch those movies could bring lots of revenue to AMC. So despite having these 90% drops in the share value, raising liquidity through dilution in the reverse stock split, and having a great year in terms of revenue from these different ticket sales, and even more to come with the Taylor Swift tour, does AMC have a foreseeable future? I think the question is, and I think the answer is, if AMC is able, in my own opinion here, of course, to maintain those financial liabilities, get through its debt, get some better rates on all those different types of debts that it has for refinancing some of those loans, and they continue to do well, I think there could possibly be a recovery for AMC. Now, of course, it's still a very highly speculative play. Even AMC and even the company has issued warnings against investing in their own stock. So that does tell you really how speculative this play is. However, I think it's interesting, and I do think there is a light at the end of the tunnel. The question is, will we ever get to the end of the tunnel? Take care, peace out, and catch you guys later.